This webinar is going to equip you with the tools you need to help lenders resolve their uncertainties about working with your brand. Over the next hour, we're going to address the big picture of what's happening with the SBA and Congress in particular, and that is very, very interesting, so stay tuned for that. We're going to see how that's going to affect franchise financing. We're going to look at the new regulatory and standard operating procedure changes, lender reactions, franchisor reactions to the SBA changes, and the franchise registry solutions. Yep, we got a lot to cover, and if you're bored already, well, hopefully I'll attempt to fix that as we proceed. And by the way, please read the slides. And I'm not going to go over the slides. I'm just going to talk about the slides, all right? Okay, so the SBA, as you're aware, is a large lending source to the franchise community, and obviously it's very vital to the flow of capital. Therefore, I think it's helpful for everyone to understand the big picture of what's going on at the SBA to put recent franchise changes into perspective. I want you to think back to high school. Yeah, high school literature. Remember that when you had to read all those books? And remember that book, Tale of Two Cities? Remember that first line? It really is right now a tale of two cities. It's the best of times, and it's the worst of times. So let's just start first with why it's the worst of times. And this is where I want to talk about what's happening in Congress. And it's unprecedented, actually. This has been a time in which there have been numerous inquiries into the SBA portfolio. And I don't think a lot of people know that. These stats that I'm going to give you are really pretty startling, actually. There have been over 7 congressional committees about the SBA in 6 months. 7. The House Government Oversight and Government Reform. Now, this is the same committee, remember, that investigated Milan of EpiPen. And that committee is chaired by Republican Jason Chaffetz of Utah, who subpoenaed, remember, an unprecedented amount of records to investigate that case. And he is now subpoenaing an unprecedented amount of records to investigate the SBA portfolio. More recently, the House Views and Estimates sent a letter to the SBA and provided a press release at the beginning of March in which the committee said, quote, it was planning to provide aggressive oversight of the 7A loan program, and the SBA must ensure that it can provide proper oversight to its capital access programs so that the underlying public policy goals are met, end of quote. So as I've said, this is unprecedented, and we've got to ask the question, why is Congress investigating this so aggressively? What is driving this? Well, there's been a 58% increase in the 7A loan portfolio from 2012 to 2016. 58%. I'd like you to guess, I know you're on mute, but guess what the total SBA portfolio is, and maybe some of you know it. Total SBA portfolio is $78 billion. Now, we get used to the word billion, but let me put that in perspective. In terms of size, this puts SBA's portfolio in the top 1% of banks' sizes. And there are only 35 banks that have over $50 billion in assets. So literally, the SBA would rank 31st in the largest bank by asset size. And of course, there are some other things that are playing into Congress's perception of risk in the portfolio. And most of us know some of these. For example, the market premiums are at all-time highs. That we also know that loans are being sold off on the secondary markets. That's growing. And there is increasing concern that the incentive is high. Why? Because they're trying to book bad loans. So honestly, the U.S. taxpayer is on the hook. And to an oversight committee that is responsible to actually be an oversight committee, this looks a lot like the pre-2008 run-up with unintended consequences of incentives driving bad loans. So, friend Ada, we would really encourage you to listen to the Milan hearing because these are Republicans on the committee who are fine with a profit motive. They don't believe in government intervention in private enterprise, but what they said on the video in the Milan case is you came into our offices asking for government assistance. So you asked us into your business. So you brought this inquiry on yourselves. Now let's look at the SBA quest for simplicity. All of this is going on, right? And then we need to look over and what's going on at the SBA, because the mantra at SBA is grow, grow, grow. So the SBA wants to continue to grow the portfolio, even though Congress is concerned about this growth. And what they want to do is their objective, they're trying to make SBA lending so simple, a caveman can do it. And this quest for simplicity has been happening over a period of time. And we see this, and this is where we're going to talk about the recent SOP, the Standard Operating Procedures that the SBA released. But let's look back over the last few years of what they've done. And this is perhaps one of the biggest one. In 2014, the SBA was supposed to only provide assistance to borrowers who are unable to obtain credit at reasonable terms elsewhere, right? We know that. In 2014, in order to get simple, the SBA led them to eliminate the personal resource test. The personal resources test for SBA loans set forth a formula requiring any 20% or greater ownership of businesses to use a portion of their personal resources to reduce the SBA's share of the financing requested. This, in turn, right, should naturally produce more creditworthy borrowers and increase the probability of success for businesses. That makes sense. That's the positive side. But the negative side, without the governing elements of the personal resources test, there's been a growing concern that borrowers who can obtain credit on reasonable terms elsewhere are now receiving SBA loans instead. So that is another concern for Congress as to why the increased investigations continued, and it's also probably why the demand for these loans has spiked. Now, all of this looks to Congress irresponsible. Why would the SBA eliminate the personal resources test for a loan program where you're supposedly only granting loans to borrowers who cannot obtain credit elsewhere? Hence, one of the reasons for the incredible scrutiny in the past months. All right, 2015, another quest for simplicity. The SBA created a software system called SBA One. At first, they were going to require all lenders to use it exclusively because it would be a guided process where a lender couldn't make a mistake. Sounds good. So presumably anybody without prior experience could do an SBA loan. And that would attract more banks and keep the goal of grow, grow, grow. And well, that backfired because lenders have their own software systems that are far more sophisticated than the SBA system. So now we're back to allowing lenders to stay with their own systems. All right, then we get to 2016, in which they changed the franchise regulations to allow borrowers who own other ineligible businesses to get financing for an eligible entity. So the existence of that ineligible business didn't affect the loan for an eligible business. And now, 2016, end of 2016, beginning of 2017, January 1, the SBA really tried to make everything simple, as most of us know. And they went further with the SOP changes and dramatically changed the landscape of all of our communities, the franchising community and the lending community, but specifically the lending community, the end of last year. This change met with a large enough pushback from franchisors that, and I hope you know, that there is also a temporary measure, which we will get into, that was instated in February. So we have two options now, and as I said, we'll get into this later in the webinar. So whenever we talk about SBA financing, it's very important to keep the big picture, the broader financing picture in mind, right? Because the franchise lending cycle is similar to a tidal wave. Coming out of the recession, Lenders were slow to open up their credit box. No one was lending to restaurants or hotels. Some of you remember this, for instance. And over the last 2 years, lenders have really loosened up their credit box to compete for deals and to expand their market share. So now you can actually get credit for almost any type of borrower. It just changes the terms and the risk and so on. But here's what you need to know. After this tidal wave comes a credit contraction. And there are warning signs of a credit contraction. That is very important for franchising and capital access. Now, how do we know this? Well, in small business lending, we are seeing the highest delinquency rate since November 2012. Zero down financing, another big sign. Lenders, we have a lot of discussion with lenders, and lenders have been talking about how the market feels like 2008 before the crash. Lenders that have been traditionally heavily concentrated in one sector, like restaurant space, they're looking for other sectors to diversify because they simply can't compete. And listen, we will see rising interest rates this year. We know that. So what does this all mean? Well, with increased oversight by the House Committee on the SBA, there will be increased oversight on lenders. Here's what you need to know. This is where you need to pay attention. This means that franchisors need to get ahead of lenders and any negative effects on the SBA landscape. Why? You need to eliminate any hurdle that are unique to franchise financing in both the SBA world and to all lenders. There was a newsletter by SBA outside counsel that said, remember, the lender now has the burden of proof of compliance. And lenders should ask themselves if they have enough documentary evidence in their file to prove that they complied with all applicable material and SBA requirements. So if the mantra of the SBA is grow, 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 the mantra of lenders is now document, document, document. It cannot be emphasized enough. The SBA lenders find themselves on the receiving end of a recommendation for a repair. Remember, a repair for the SBA means the SBA has looked at it and they're not going to pay full guarantee. So sometimes the lenders look at this and they're on the receiving end of a repair or a denial, which means that the SBA won't pay any of it, not because they necessarily failed to comply with the SBA loan program requirements, but rather because they failed to document their SBA compliance in their loan file. So the lender's deficiency is often one of omission, which means failure to document, rather than commission, meaning doing something wrong. So once again, if you're not going to get ahead of the lenders and help them, then be prepared, because it's going to take longer for franchisees to access capital because lenders are uncertain. And we're going to see that. They aren't sure what they're missing, and they don't want to be caught with a repair or a denial. And it's important, very important, for you to be nurturing more relationships with lenders to ensure that your franchisees won't be challenged to receiving financing. All right. Because we live in the franchising community, and FranData is great about living in both worlds. We live in the lender community. We live in the franchising community. And so we have had a number of webinars for lenders. And I wonder if you think about how many lenders do you think we've had on our webinars? We have had close to 4,000 lenders on our webinars. That tells you something, doesn't it? And we take the pulse of how lenders feel about these new SOP changes. If you want to look at this, you can see most lenders are uncertain. They're not sure. They're not very positive. They're negative. And how do you think these changes will affect this is important. How do you think these changes will affect the number of franchise loans you will be able to finance in 2017? 70% are uncertain. That is a big number. So we need to understand, yes, change always creates uncertainty. We get that. But we're seeing that these changes created more uncertainty than SBA intended. In fact, when we're talking to some of the community banks and the small lenders, they're starting to think that the SBA is trying to discourage even lending to the franchise community, but that's not true. It just feels that way. And you'll see why in a moment. All right, so we're going to talk about the SBA Franchise SOP, but I'm going to stop talking for a little bit and let you talk. So what do you feel about the SBA's SOP franchise changes? You can vote. So all right, we're getting it. Da, 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 da. You know, Jeopardy here. Good. A lot of you are voting. That's fabulous. Keep going, because we really want to keep track of this. Okay, a couple more seconds. All right, we're going to close the poll. Wow, 75% of you are saying that you are uncertain. Wow. Okay. Let's do another poll. Now, I don't want you to feel guilty, okay, because that's why you're on this call to find out about the SOP, but we want to know, have you reviewed the SBA's new standard operating procedure? Start voting. Okay, a couple more seconds. All right, we're going to close the poll, see what the results are. So 66% of you have not read it. That's about correct with what our stats are from previous webinars. And 34% of you have read it. So let's go to what we've done before. You can see that it's a little bit higher, being uncertain, 75, and a little bit higher about reviewing the new standard operating procedures. And by the way, we have those available. You can call our office, and we'd be happy to provide that for you so that you can read it over, but hopefully you won't need to after this webinar. All right, let's move on. Thank you for voting, by the way. That really is helpful to us. All right, before we get into the specific changes, sometimes it's helpful to provide some historical context. And for those of you that remember, the SBA franchise reviews happened prior to the financial crisis. So if you look at that timeline, right? So before the financial crisis, the SBA looked at a handful of issues, specifically, though, the SBA, what we call affiliation. Now, we want to make a distinction between affiliation and eligibility. Franchise affiliation is different than eligibility. We've always been talking about franchise eligibility, and now all of a sudden there's this new word called franchise affiliation. And franchise affiliation is really a subset of eligibility. Eligibility is a broader term for SBA lenders, and we'll see why that matters in a few moments. But the SBA, prior to the financial crisis, only looked at franchise affiliation. So then the financial crisis occurred, and there was an unprecedented loss in the SBA portfolio. So you would think, and they did, they decided to really look into what happened. Why did they lose so much money? And they began to review all the defaulted loans and noticed a significant number of issues that lenders missed in their loan evaluation. So, and additionally, this was the first time that the SBA saw clearly that franchise affiliation issues, by their interpretation, could affect a franchisee's right to profit. Therefore, it was at this time, and some of you have experienced this, it was at this time that the SBA started expanding their reviews. More rules came into the franchise affiliation review, and that's when the addendums started happening, right? And you had 1 page, then you had 2 pages, then you had 3 pages, and then it's, as you can see on the chart, then they began to review all kinds of other documents, and they started consistently making determinations of business eligibility. Now, I want to show you something that's kind of, it's not really funny, but it's kind of interesting how it all turned out. The most famous of the business eligibilities was the Sola Salons and Salons by JC. And you can see these are the actual letters to Edith, which is great. And they were taken off the franchise registry in August of 2009 because the SBA determined that these businesses were passive businesses and therefore not eligible for SBA financing. Okay? That wasn't too much fun, I'm sure, but that's what happened. Well then, in 2010, the SBA said, oh, you're eligible. So everybody was all, okay, great, that's fabulous. And then you can see in 2014, they were determined ineligible. So, you can imagine what the loans were doing and the lenders were doing behind the scenes on that one. And then another time, once again in 2010, master franchise agreements were determined to be ineligible because of business eligibility issues for SBA financing. But area rep agreements, they did not consider to be passive. So once again, there was all this confusion, and FranData was very, very helpful in trying to iron out some of that confusion. All right, this is we're coming to perhaps the most important slide. So I want you to stick in here with me as we look at this slide, and I want you to read the slide because this really is the crux of the issue, all right? So the new SOP, which came out in January, is in many ways going back to the pre-recession days. So the easiest way to illustrate it is to look at what happened before and what's happening now. So in SBA land, they've put out a lot of SOPs. So if you're not in the SBA world, you probably don't know that, but they've put out a new SOP almost every year. So if you look at the screen, you'll see in 2016, the SOP 5010H. That was what was happening in 2016. And you can see that the SBA made determination on whether a brand's business is a franchise according, and this is very important, according to SBA's unique definition. Now, that is very, very important because the SBA had a very broad definition of franchising. Okay? We're going to come back to that. Then they made determination on business eligibility, and of course they negotiated and streamlined solutions for other documents. So that's what used to happen. And then this new SOP 5010I, which you see in 2017, came out. And I want you to see all those red X's because those are very important. Because what happened was the SBA said we're not going to approve documents. So you have this streamlined, we'll see what the franchisor's reaction to all of this is, but you have a streamlined solution for franchise affiliation now. You can use either the standard SBA affiliation addendum, right, this is what we're talking about, or they came out within February, you can use your 2015 or 2016 addendums that have been SBA approved. So we got two choices if you went through the SBA approval. So because the SBA changed their definition of a franchise, this has become a big risk for lenders. And this is where we really need to spend a little bit of time here. So by making this decision, by the SBA making this decision, the risk for the loans is now on the back of the lender. And let's look at what this means. All right, so first of all, the risk for the lender for the FTC definition of a franchise is changed because they have always gone with the SBA's definition of what a franchise was. They had not even heard of the FTC franchise definition until this came out. So they're behind the eight ball here. And so brands like FedEx, Allstate, Nationwide Insurance, Save-A-Lot, they were considered franchises by the SBA. Now the risk has come back to the lender, and the lender has to determine if they are franchises meeting the FTC guidelines. That's hard. It's a lot of work. Okay, so the second risk the lenders have now is they have to determine business eligibility. This is an area where most franchises were held up for the longest period of time when the SBA referred franchise registry applications to the Office of Litigation, and some of you know this better than I do, where the franchise business operations manuals were reviewed. most of you probably don't know the difference between business eligibility or franchise eligibility, but business eligibility is an area for lender concern because if the business isn't eligible, then it's not a government guaranteed loan. And more than this, the SBA expanded their business eligibility rules with this SOP so that any business targeting a subset of the population has to be vetted for discrimination. Now, before, this was just explicit for gender-specific gyms, but now it is much broader. And the SOP is clear that lenders must look and read through, listen, the entire FDD to look for other SBA requirements. Fran Data was at a conference for a webinar for lenders given by the Lender Association, and a lender asked, hey, the presenter, can you provide me with a list of other SBA requirements that I should be looking for in the FDD? And the presenter said, no, such a list doesn't exist. You just have to be a prudent lender, and you got to do your due diligence. Well, for a small lender, and especially if you're working with small lenders, this is a huge task for them. And you can see now why they're concerned. You can see why they're anxious and why they're trying to catch up a little bit, because they weren't in this business whatsoever, and now they have to be. All right, let's look now at the franchise community reaction initially to all of this. And I think sometimes we're in our little silos and we go to conferences and maybe we talk to a few franchisors, but Fran Data is great because we actually get a lot of feedback from you and from lenders. So first, what happened was there was some positive feedback, of course, because, and for many of you, this is great because it's a reduction in the number of rules. You don't have to wait as long. You don't have to, go through all of the waiting for the SBA to approve. But it also brings up, and more every day that passes, some unresolved questions about, some of the areas that are kind of gray because it's simple, and some of our issues are more complex. And so there is some of this gray area, but there were a number of franchisors that when this occurred, they were very, very excited. There are some franchisor concerns, and remember that standard one-size-fits-all has 4 items to it. Now, I want to talk about, just for a second, I don't know how many of you have bought one-size-fits-all clothes, right? And you look at it when you buy it, and it seems like a good idea at the time. But, when you look at those one-size-fits-all garments, or clothes, you say, this can't possibly fit everybody because I've seen some of the people and it isn't going to fit. Well, that's kind of what happens with this one-size-fits-all standard addendum and why it makes some people happy and some franchisors not so happy. And a good analogy here, and I don't know if you know this, but franchising falls into 230 subsectors. So basically every type of business model falls into franchising. And we were talking to Chase Bank, and it's kind of interesting because Chase Bank got it because they said, you know what, it's kind of very similar to what we experience here at Chase Bank, because they're the largest bank in the world. They said we have loan documents and we require them, and we would not give up this requirement. You see, small banks don't require these things. Why? Of course, it's obvious because Chase has a lot more risk than a smaller bank has. And so it's the same is true here in franchising. The largest franchisors have had the most number of issues with the addendum and the SOP changes. And the addendum has also caused some concerns, as now we're not giving franchisors the ability to provide clarifying language or the flexibility to craft a solution that met their business needs. So, for instance, we had a franchisor, they preferred their old addendum. Why? Because the new addendum lost some language that was helpful in the event of a termination. And please know that this addendum also takes away the franchisor's right to step into a business. And the previous addendum was a little bit more flexible in terms of step-in rights. So further franchisor concerns are some of the covenants, employment, and that is a big one. Because some of the franchisors are upset because they've expressed outrage that the addendum has embedded a presumptive link of joint employment. And one franchisor said the franchise agreement explicitly states that the franchisee is an independent contractor, and that should be sufficient. We've had lots of franchisors explain that they don't care about the addendum, and I had one tell me in December when this all came out, what I care about, I just spent a lot of money creating solutions that's going to streamline issues, and now I've got to negotiate with each lender. And there's also language in the SBA addendums that was designed to address lending and security concerns of the bank, including language to protect the bank's collateral and its priority interest. As such, banks will more than likely want to include some of their provisions in a separate agreement, and a separate agreement may allow us as franchisors to incorporate some of our language. So hopefully this is going to happen. All right, I've talked long enough. Let's have another poll. All right, for those who have reviewed the addendum, what is your reaction to the one-size-fits-all addendum? Boy, some of you are really fast. Woo! All right, pretty close. All right, good. Oops, more coming in, okay. All right, we're going to close the poll. So 55% have concerns, 20% does not, 23 said, I don't know. And that's pretty close to what we had. Thanks for being honest. That's great. All right. Do you know if other SBA requirements could affect your franchise systems? And attorney, feel free to respond on behalf of your client system. Almost there. All righty. Here we go. Uncertain. Yep, and that is true. I think almost everybody is a little nervous about that. Our last poll said 82%, so we've come down a little bit, which is good. So there are concerns, and especially about the other SBA requirements, which, as we all know, is a little bit unclear as of this moment. Okay, so we talked about the SOP, the SBA, we've talked about lender, and we've talked about lenders, we've talked about franchisors, and one of the biggest questions we need to have answered, and this is very important, will the franchise registry operated by FranData be going away? Absolutely not. In fact, we have seen a dramatic increase in lenders, as I can tell you, because of the lender risk, right, is what we discussed. We have seen a dramatic increase in lenders coming to the site. Last month, there were 4,500 lenders on our site, 4,500. You bring a lot of hurdles to the lending process that are unique and that provide uncertainty and risk to the lenders, and the franchise registry has always solved these hurdles with you and erased uncertainty and risk to lenders, and even more so now. Do you know that we have 8,000 lenders as lender members on the site? 15 new lender members a week for the last 2 years, and it's increasing, as I mentioned. We've had some, this is funny because when this was all announced, we were wondering what was going on our website because the lenders were coming on and they were downloading documents like faster and faster and faster, and we're like, wait a minute. They were scared to death that they weren't going to be able to access their documents. And it is confusing the way the SOP is written. It sounds like the franchise registry is owned by the SBA, but it isn't. The SBA has never hosted the franchise registry. Now, what they did do, which was amazing, is that they allowed their franchise determinations available to the franchise registry. But the site has always been owned by FranData. Now, why this is important is that data that we now have is incredibly important and valuable to lenders. And it's important to franchisors. I've had franchisors call me up and say, listen, I'd really like to use my 2015 addendum, but I don't know if it was approved or not. Can you check for me? I mean, this is great data for the lenders and for franchisors, and we have it at our fingertips. So let me show you give you a little sneak peek into what the lenders look at what they look at, in the franchise registry, and why it's so important to them now. I can't even tell you how many lender calls we get during the day. So here we go. This is what a lender sees. This is your main, and this is each one of you. If you're on the franchise registry and you have a membership, this will be your main account. And every franchisor has a main account page. It provides a business description. There's a funds number, which is used a lot, and it's our unique number, and it keeps all the franchises straight. It contains your franchising status, very important contact information, so that the lenders can get a hold of you, and it will be very soon connecting with e-signature, so that will be great, and that we can deliver capabilities over the next few months. And every franchisor has a total of 5 folders of information to help lenders through the lending process. Again, lenders need help, but we'll really focus our time today on the SBA folder. Okay, now this is what an account looks like when you haven't updated the profile page. That's why our reps are working very, very hard to try to talk to franchisors to get everyone to update their profile page, and that you have to go through one of the reps in order to update your profile page. Lenders, I have lender calls all the time, and they come on and they don't have the information they need, and they call us and they ask us to go out and to get the information for them. So if your rep has been asking you to fill out the profile question, please do. Call right away and get this done, because this is what it looks like. And a lender doesn't want to lend to an account that looks like that. All right, let's show you a good one, though. All right, so when an account is filled out as the sample on the slide, it goes through each of the hurdles. Remember, we went back to that very important slide I told you about, okay? It goes back to each of the hurdles that an SBA lender has to address. So we got the contact, so we know exactly who's going to sign that SBA doc, and that contact is right there. So lenders got that right away. And then it gets very, very important, right? Because look at what we do. We put the FTC definition for the lender. Remember, they didn't know it before. Now it's right there. We say, okay, this franchise meets the FTC definition. And so this is great for lenders because they relax and they go, okay, now I see that. That's great. And because the SBA, as I mentioned, had a different definition, it was just a 2-part test. Actually, it was a use of a trademark and a product or a service. And like I said, it included all kinds of dealers and memberships and so on and so forth. So lenders need to know that your franchise actually meets that definition. Okay, so then the page goes down a little bit farther. And what else are the lenders concerned about? Okay, the lenders are concerned as to the affiliation. Are you going to sign the standard document, the standard addendum, or are you going to use your 2015 or your 2016 documents, addendums, right? So we put that right there on the page for you. A lender comes on, they say, oh, okay, this company wants to use their 2016 addendum. So they use a different piece of paper. They will use a certification. Certification says that the franchisor, you would sign that and say, I certify that my document, my addendum has gone through the SBA and have gotten approved. So the lender immediately knows, okay, this is good. I got this. Now, if you sign the standard, they know which piece of paper to give to you to sign. So lenders are feeling a little bit more relaxed here when they come on here, and they can see, and you can see that we actually put the addendum right there so that they can actually access it that easily. You know, lenders are very interested in getting a loan done quickly. The longer it takes for them to do a loan, the more money they're losing. The longer it takes for them to do a loan is money that you're losing. So so putting this here for lenders is essential so that they can come on and they can see everything and they know. And we, again, see the business eligibility, what we do. We put all of this on there so that they understand what makes a business eligible and that this business meets eligibility. The lenders need to have that guarantee. They need to have that confidence, because one thing we've learned, and one thing you should know, of course, is that the lender's number one concern is that SBA guarantee. They won't be making a loan without it. And because they're a little nervous right now, very important to get this done, and they want to be 100% certain that the guarantee is not going to be impaired. And so the SBA consistently advises lenders that the paper trail of evidence is one way to assure their guarantee, and that's what the Franchise Registry provides for them. Okay, so then this section, if additional documentation is required to meet business eligibility guidelines, then the document that you need will be added for the brands and the franchisees to sign. So, for instance, franchise brands that market their business to one segment of the population are viewed by SBA as potentially discriminatory. Therefore, they have to assure the SBA and lenders that they're not discriminating against other segments of the population. That would go here. There are also risks relative to other SBA requirements. There are brands that have comfort letters or lease agreements and things that do not meet SBA requirements, and many of those other requirements are focused on credit issues that, for instance, impair the ability of the lender to foreclose. So if you have any kinds of documents, we put it right there. We also have the select year of review, so they can actually go back and review your FDDs. Again, you can see why this is so valuable to them. So anything that you need that you had issues that were fixed in your previous SBA addendums will be addressed in a separate document and posted in the other SBA requirements section, and will explain to lenders what will need to be modified to meet SBA requirements. And all of the documents will refer back to previous decisions made by SBA, so the lenders have documentation and assurances that their guarantee is secure. Again, the Franchise Registry is able to provide the paper trail that they need. All right, here's some other things, perks that they get. It's kind of fun. The lenders will know, there are 3 ways they'll know if you update your account. First way, obviously, is when a lender has a prospective borrower, and so they log in and they find your brand and they make sure that everything's great, and they search for your brand and they go into the SBA folder and they go into all the other folders and they're happy. This is another way. The second way is over 1,000 lenders have franchise brands in their portfolios. So they actually can have like little folders that they keep their brands in, and they establish a list of brands that they have lent to, they regularly lend to, or they want to lend to. They're kind of looking around. And believe it or not, we have some lenders that have as many as 1,000 brands in their portfolio, but the average lender has about 50 brands. So for every brand in their portfolio, the lender is alerted whenever there's a change on the franchisor's account. Any change to the information, so if it's in your portfolio and you change any information, they're going to get alerted. Anything, like just even a small name change, or your franchise units, or a change in your fund score, or if you got a new bank credit report, or new franchise disclosure document, everything is given to them as an alert, so they can go and look and see, okay, what changed, and so they have another level of comfort. So this also includes updates to any piece of information on the SBA tab, including whether you will sign the affiliation addendum, when in the process you will sign, which is very important, and if the business meets the definition of a franchise according to the FTC business eligibility and documents to resolve other SBA requirements. Okay, and then, so we got all the stuff that's in their portfolio, right? But lenders can customize the notification based on brands that are for the overall site. So they can be notified of any new franchise that's been added to the site, or any franchises agreed to sign the addendum for the first time. So they can go through, they can do all the notifications they want. They can get them weekly, they can get them monthly. And so this is very important to their comfort level, and also when they're looking around, oh, that's a new franchise, I'm going to look at that. they decided to do this, or they changed from, we've had some franchisors change from the standard addendum to using their own docs. And so, that's updated too, and the lender gets those notifications. Lenders can also do advanced searches. So this is really cool because they can look and see, okay, which ones have actually in different states and how many years in business, and they can do a very advanced search to get your brand to come up and to get brands that they want to loan to. So this is important for all of us to know that lenders have all of this capability to find your brand. They don't just have to go in and search on your particular brand. So I want to show you the results. So this is why this is important to you and why I've gone all over this, is because the result of the lender poll that we did, if you look at it, since we've been in this industry, we know that the most important part of SBA finance is certainly around the guarantee. What are you most concerned about regarding your guarantee? Look at what they've said. All of the above, 54, 59, 51%. So for no other reason, believe me, they are concerned. So what I want to say to you today is, for just a moment, put yourself in the shoes of the lender and think about what they're dealing with. We have a lot to deal with on the franchisor side, but it will help us if we think about what they have to deal with. How are we, as a franchisor, how are we going to help them? Because they want to help us. How are we going to make a difference to make lending easier for them? And figure out ways that you can do that in your company. As I said, nurture relationships. Try to meet lenders. Go on the franchise registry and make sure your docs are there. And all of that just so that we can ease this capital access and make it easier for them. All right, takeaways. So first, it's important to understand that lenders, of course, as you know, come in all shapes and sizes. And when you're part of this world, the FranData world, and you learn more about the different types of lenders, we have some lenders that are like productions, right? They're assembly lines. One person does one part, one person does the next part, one person does the next part. And so you have specialists who are specializing just in SBA eligibility or who specialize in franchise affiliation. So in some larger lenders, they have all kinds of different departments. But some don't have that assembly line production shops. You have a lot of lenders who are regionally based, and they just may have a business development officer that is doing some of the credit write-up. And you might have someone who has a credit team, and they deal with, depending upon the size, and you might have SBA lenders that are small, and they have 5 to 10 loans a year. And those guys are going to have a difficult time. And they might actually outsource some of their SBA processing to a lending service provider. So you have a lot of different levels of sophistication in terms of volume of both SBA and franchise lending. So this is going to impact not only the experience, some of which can be very positive, but also they're going to have very different levels of friction depending upon the bank. Here's an important question. We're going to talk about this just for a few more minutes. What can you do? What can I do today to help lenders adjust to these changes while increasing my appeal? That's one of the questions I want you to take back to your businesses. What can we do? We know at FranData, you can update your account. That enables, as I've mentioned, these 8,000 lenders members to know that all of your information, we've gone over that. Make sure your contact information is correct. I have updated so many of these, and the contact information was totally outdated. So it's very important that you go to your representative or call FranData and get this contact information updated so that lenders can actually know who to contact and how to get a hold of and who's going to sign what, etc. The other thing that you can do if you're a mature brand, and this is something a lot of people don't know, if you're a mature brand, you have over 50 units, you have a fund score. That fund score is given to lenders, and so it's very important that you know what that score is. Understand your lender perception. We have, if you're a membership, you have a membership of the Franchise Registry, We have a 30-minute financial call, and especially if you're a mature brand, we go over your credit score, your fund report with you. So you understand how it was arrived at. You can understand how you can improve it. We talk about how you can become more transparent. And it's very important to have this call, and it's very important to know, especially if you're a mature brand. And if you're an emerging brand, we still have those calls with you. Go over what will happen when you get these fund reports. So very important for you to understand how you're appearing to a lender. And that's what the call is all about, is that we go over, okay, what's a lender see when they look at your company. If you want to renew your account, just call us. Very easy. We do want your FTD. It's important for lenders to be able to see that. So obviously that needs to happen. Just feel free to call in, and it's very nominal charge. What else can I do to improve lender perception? This is kind of interesting here. You can do different kinds of things for the documents. For example, look at that. Tropical Smoothie Cafe has their menu. They've got their franchise brochure. So you can put different things to make yourself more accessible to the lender. It'd be kind of cool to put your menu on there, or whatever means that's important to your franchise brand. And we also, if you have a bank credit report with us, we will put that on the registry, the franchise registry. In this case, Tropical Smoothie has a 2012 SBA enhanced analysis, which is something we did for them. It's a third-party thing. So anything that you want to put on there, pretty much, we can put on, and that helps a lender get to know who you are. Coming soon for you. You are going to get to be able to see a lot of the lender activity on your side of the franchise registry, which is very exciting. You will be able to actually look and see, what the bank is looking at and how they're trying to access you. And you can actually contact them and understand their process and see if you can help get involved in this loan process and make it easier for them. So this is exciting news for us. We're also going to give you just like the lenders, remember, have all this ability to search. We're going to give you those capabilities that you can search them. And you can, as you can see, you can put a geographical footprint in, and you can do a preference. You can do a loan size preference. This is very exciting because we're trying to match you up. We're trying to give you the information you need to have, and so you're not blind and they're not blind, and we can handshake in the middle and get capital access done, and that's exactly what we want to have happen. All right, poll question. Now, what do you feel about the SBA's SOP franchise changes? All right, we're almost done. Alrighty. Still uncertain. All right, I think a lot of us are, so that fits in with what's going on in the industry, and especially the lenders. Maybe there are a lot of lenders on this call too. So, alrighty. Now, if you have any questions, you can put those in there. We will get to those in a second. You can rate this presentation. In terms of explaining, we'd love your results. That would be great. And do we have any questions that we can answer here? Because we're almost to an hour anyway. And I'm waiting. I think people are asking some questions, so we'll wait just a minute. I'm trying to hold to the hour. All right. there are a couple questions that we'll answer individually. Okay, someone has asked, so the difference now is they're requiring this addendum, which we can choose which addendum we want to use. So yes, okay, so there are two addendums. It's called the standard addendum, which is the one-size-fits-all. And if you choose that, then the lender will give you a piece of paper that you will sign, and you say that you would choose that. You can also choose to use your 2015 or 2016 franchise documents the SBA approved. That's your second alternative. You have to choose 2015 or you choose 2016. And the lender, and there is a little bit of pushback on this one because some of the lenders are not aware of it. I've had to take a lot of phone calls on that. So if you say that on the franchise profile page or you tell a lender that, then they give you a piece of paper to sign that will certify that these documents were SBA approved. So you have two choices if you have SBA approved docs. If you don't, you only can sign the standard, the one-size-fits-all. That's all the choices you have. You don't have two choices. The negotiated addendum that came out in February is possibly, it says on it's temporary, so we're kind of waiting a little bit to see what's going to occur. We don't know what the SBA is going to do. The date on that is February 2018, but we know at any moment they could pull it or they could adjust that date. So, all right, second question, and this is it. What happens when a lender sees that I'm unverified on the franchise registry? Well, I've had a number of those calls. Last week I had 3 calls actually in a panic. 2 were on the franchise registry, 1 was not. The 2 on the franchise registry hadn't updated their profile pages, so we went through that, and then I had to call the lender, and then the lender had to come back on, and everything was great, but it was a little bit of a panic for the franchisor because they had no idea that this was happening. The one franchisor that was not on the franchise registry, we had to talk through that situation. They did decide to come onto the franchise registry. The lender was very happy about that. And as far as I know, the loan is processing perfectly. So it is very important to, at least if you have a preferred lender, at least get that information out to them. If you don't have a preferred lender, start looking for them. We do have a whole support system for lender help on the franchise. We have a division of that, and or try to get onto the franchise registry and update that profile page. All right, great. Thank you for participating. We do have a few other questions, but we are at the top of the hour, and I do want to be faithful to that. Thank you again, and appreciate your responses. Thank you for your honesty. And we look forward to talking with you soon at FranData. Thank you. I have no idea what those questions are.